Mic check, mic check. All right. We're good there. Just getting the set up. You'll see what I mean in a moment. But thank you guys so much for those of you that are watching this back, those of you that are joining live. Much appreciated, as always. I just realized I have to change the logo on my intro screen here because it says the Twitter logo, but it's actually, X and all that now, so might as well update it. But, like anything else in life, a million things going on, trying to just balance it all. Well, I guess I meant like anyone else out there, with their own life, their own things going on, trying to balance things. If you guys don't already, follow me on Twitter. I've been tweeting out more information there. I've been really trying to just get my thoughts in line and really just kind of go from there, right? Like I'm going to get my thoughts in line, but also try and build upon it and, make videos and all that different stuff. So I lost the N on Tetron Invest here, so we're going to have to work on that, but it's all good. Get the side here. Boom. Whoa, not good. Apologize, almost ready here. But it's crazy. I don't know if I've said this before. I have to set everything I set up here, like at this table, this desk, like everything's like put together and then completely put away. It's not like an actual setup. So it always takes me like a few minutes. Then I'm coming home. I'm trying to eat real quick, because I've been at work. And then when I try not to eat and I stream right away, I feel like during my stream I'm like da da da, like my brain just stops working because you don't eat, you can't focus. I don't know if everybody has that, but for me, I have a really fast metabolism and I'm absolutely blessed for that. But it makes it really hard to like focus sometimes if I'm hungry. Like it's extremely difficult. But like I said, absolutely blessed to have a fast metabolism. Definitely not everyone has that. So anytime I say that, people are like, "Oh yeah, it must be so difficult, right? Always being hungry." I'm like, "Yeah, my bad." But yeah, it was like a holiday, not holiday, but like a themed thing at work today. So I don't know if you guys caught me on Twitter. I was dressed as Luigi. I put out a poll, I was like, should I dress as Luigi for the stream tonight? And I was gonna, but then I got home and like just got undressed and everything. Not undressed, but changed out of like what I wore during the day. So okay, this doesn't want to plug in. All right, there we go. But I hope everyone's doing well out there. Like I said a few moments ago, if you missed it, I'm starting to write some threads. I can even give you guys a little bit of insight on my Q2 2023 preview. I've already wrote a little bit, but I figured why not start writing it out in threads in long threads on X, not the app threads. Maybe I'll hop on there soon too. But really just to get my thoughts all out, and really what I'm trying to do is organize all the information I'm putting together so I can look back and like, okay, like this is what I was thinking at that time. Because I feel like I have the right ideas sometimes, but I'm not like keeping it in line, in order, and following up on the things I say I want to follow up on. So I got you guys. We're stepping up the game. Good afternoon, Tetron Investing crew. Jesse, thanks for stopping in. Appreciate you. Hey, Luigi, Fresh Maker, what's up? Thanks for being here. San Diego GME, hope you're doing well. Thanks for popping in. All right, we got all chat here. I don't want to miss any messages. Boom. But yeah, so as you guys can see, this is behind the scenes here of how I'm trying to write these threads. SG&A costs, we're going to talk about that. There's a lot to talk about, honestly. I mean, this is the prime time to talk about GameStop going into earnings, I feel like, and post earnings. So I'm just kicking it into high gear. Like I said a little bit earlier too, like anyone else, I say, oh, I have a lot of stuff going on, but so does everybody, right? So it's just about making time and executing. So yeah, I'm pretty pissed the N is missing because I could actually have the sign here in the background. But really, I could also have these dudes. I could put Vader or this lava lamp if he wants to fire up in time. Let's see. But yeah, sooner than later, I've also been saying this for a while, the stream setup will be coming. But that's when I have my own place where I'm settled, because I'm kind of a journeyman. I'm always on the go, honestly. I mean, not always, but split a lot of time between like my parents' house, my girlfriend's house, and stuff like that. So, and mostly I'm operating on a laptop, but making progress. So definitely a question on everybody's mind is, will there be an earnings call, right? And originally when I tweeted out the announcement, I was like, yeah, maybe there will be. And then I looked a little deeper, or just actually looked at the announcement itself, not really anything that deep in terms of analysis. But if you look at the first quarter release in terms of saying, yep, this is the day we're going to release earnings, they said it on May 30th for June 7th. They said the phone number for the investor conference call is blah, 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 and the confirmation code is blah, blah, blah. A recording of the conference call will be made available on the company's investor relations website. So basically, it also says the company will host an investor conference call at 5 p.m. Eastern on the same day to review its results. Then you look at the most recent one. Whoop, still the same one. And you just have Grapevine, Texas, August 23rd, Global Newswire. GameStop today announced that it will report second quarter fiscal 2023 results after the market closes on Wednesday, September 6, 2023. So while it doesn't definitely mean there's no earnings call, can't help but wonder, is there going to be? Seems like probably not, and just how they've done things in terms of keeping their cards close to their chest, and how little Ryan Cohen spoke throughout this whole saga. I mean, we get tweets here and there. You know, a couple times he's done small things like the Toast interview. That was extremely rare. But just looking at the situation as a whole and how Ryan Cohen is as a whole, I feel like it's more likely than not that there's going to be no earnings call at this point in time. But again, nothing's for certain, right? And I think all that means is that individuals have to just take a deeper look at the earnings report itself. I try and read it, head to toe, line by line. But, I'll be honest, I don't have the greatest attention span. I don't think anybody does around my age in terms of swiping. Again, not that that's an excuse, but I just mean, even if I read it top down, right? Top line to bottom line the first time, there's going to be things I miss, right? And that's why I repeatedly read it and just look at things and point out different aspects. Because sometimes there's things you don't catch right away. But if you look at it again down the line, you might have an extra piece of information in your mind from elsewhere or be thinking of something in a different way. And then looking at it again, you're like, oh, okay, that makes sense with what happened here. Or, oh, I didn't even realize that was in the last report. Or, oh, wow, this report compared to this report, we saw this. And I have an example of that, which I'm going to touch on later, which is the shift in the business priorities section of the report. And I don't know why all these stopped loading. But, oh, God, I don't even want to talk about that account. I don't even know if I want to bring it up, but we'll get to that later. What's up, Tetron? Fitzy, thanks for popping in. Appreciate you. No worries. Tetro Invest has a ring to it, too. I like it, Jesse. I like it. I do have another N, though. I just have to find the box that this came in. So, and Fitzy, I don't know why, but your message just reminded me to tweet out the stream. Much appreciated. Let's copy the link. Let's get this tweeted out. I don't know what the heck is going on here. X.com, maybe that's why. Let's see. Look at this stud. Ryan Song, what up? Thanks for being here. I wonder what triggered Ryan Cohen to buy under the price that he bought instead of waiting for lower. Yeah, that's a great question. It's hard to ever know exactly why or the timing as to when an executive buys. I mean, obviously after the filing comes out, we know. But in seeing it happen later on, it's, why did that day happen? It seems like it's always kind of just after earnings and just reiterating without actually saying, like, yeah, we like the company. And this is so weird. I don't know why this isn't working. But let's get this here. All I want to do is just retweet my tweet from before. Damn, that's so weird. But I mean, that's all I had to say here. So let's go to. Okay, well, it doesn't want to go out. I guess I'll do it from my phone real quick. That's so weird. I guess I'm getting doxxed in real time. No, I'm just playing. But, something to randomly touch on, which I don't think is talked about enough. We talk about executive compensation, and, this is Nirvani Patel's COO. And then the most recent one is Mark Robinson, as he became GM in Matt Furlong's departure. He's being compensated less. But then if you also look at it, he's still being granted shares on a vested schedule, like all the other executives. See, on July 2021, you were granted 11,632 restricted units of the company's common stock. The equity award will vest as follows: 5% on the first anniversary, 15% on the second anniversary, 20% on each of the dates that are 30, 36, 42, and 48 months following the grant date, subject to continuous service. So essentially, they get granted more shares in the future the longer they stay with the company. And the shares are granted based on the price of the vesting date. So what the stock price was shortly after July 1st, 2021, saying the same thing 20 times. July 1st, 2021. So there's usually a date after that. So when they're given a promotion, which in his case, he's been with the company for a while, Mr. Mark Robinson. So, in getting a promotion, he signed the sign on bonus, which is a vested schedule. So, it's usually based upon the average stock price of the 30 trading days following the start of the next quarter. So, the stock price his shares are being granted at is the average stock price of mid to late 2021. So while right now it seems like whatever, if you're sitting in his shoes, because okay, well the stock price has gone down, so how does that benefit me? But if you see the stock price being worth significantly more in the future, you understand your shares are still vesting at that same price point from the grant date. So having a higher percentage of shares grant at a later date, if the company is starting to succeed and you see this from within, you're more incentivized to stick around and also drive the success because you'll reap the benefits of it happening, if that makes sense. But I don't know why it doesn't want to let me go to my profile. It's so weird on here. I try to keep it like on the screen, because I've been studying, like engagement stuff and all that. If you go on your phone and I'm just talking here, not as many people are gonna watch. But I appreciate you all. But just annoying when stuff like that happens. But whatever. What can you do? I mean, I'm excited for football season. I don't know about you guys. I'm a huge Steelers fan, so I'm pretty pumped. I think they're underrated this year. So we'll see what happens, though. That is for sure. I'm also a huge hockey fan, and I do anticipate the Devils being good. That's my favorite hockey team. So that should be exciting. And I also apologize for anyone expecting me to look like Luigi. Did I even get all the... Yeah, here we go. Put on my Luigi hat. Put it on top. So I'm tweeting it out. But yeah, I was Luigi today. I'm like Trap Luigi right now. But I don't know why everything's not working. Crazy. Oh, okay. Perfect. Found it. There we go. All right. Now it's tweeted out. And now I'm looking sharp now that I got my Luigi hat on. I also had this mustache today. I don't know if it would still go back on at this point. There we go. Wait. Now I'm looking sharp. Now I feel pretty ready to stream. We'll rock this for a little bit. But I don't know why this doesn't want to load. That's what I can't understand. That's very odd. But we'll move on to the next thing because it better load. Because okay, I was going to say because I do want to talk about this whole thread. So let's hit the chat real quick. Wendy, thanks for hopping in. I appreciate you. Sub from South Africa on vacation. Excited to watch this stream tomorrow. Hey, MK, I appreciate you tuning in. Thank you very much. And I hope you're enjoying your vacation. That sounds exciting. And it was 6'9". Go Texans. Hey, Fitzy. Texans. Oh, there goes the mustache. I was wearing it all day. That's why it's not going to stay on. But yeah, I mean, the Texans, they have, I think, a rookie starting again, right? I mean, at some point it's got to turn around, right? So I wish you the best of luck. This thing's going to keep falling off. But yeah, it was 6-9 the last earnings, and now this earnings is 9-6. So that's pretty funny in itself. I know, shout out Fitzy, he'd called that on Twitter. He said, I have a feeling it's going to be 9-6. It's too perfect, the irreversible. So he did technically call it, though. He's almost $1 billion deep in GME. Gotta wonder what he knows that we don't. Very valid point, Ryan Sung. I think it's partly, he knows some, and this is all straight speculation, right? Everyone's going to have their own opinion on this. He knows to some extent, I would imagine, things going on with the stock price. You're reading what's going on. You go down rabbit holes. You see him liking posts from Peruvian Bull. I mean, that's in regards to monetary things, and broader scale economics doesn't necessarily pertain to GME or GameStop stock. But you would have to think there's at least some speculation there. And then also, you have a large amount of capital in it, right? So you're really seeing the business day to day and really seeing the potential. So he has the most to lose. Everyone's like, oh, he abuses his status of meme king. That's what that whole documentary, Making of a Meme King, is basically about. How he used his status to become the meme king and then pump Bed Bath & Beyond and screw over retail investors. Explain to me how that makes sense when he's over $1 billion of capital still in GameStop at this point in time, despite everything that's happened. And if he wanted to be the meme king and just make a quick buck, think about how easy it would have been for him to sell in January of 2021, late January 2021. That was when all the Ryan Cohen fandom kind of started, or just people talking about who is this guy Ryan Cohen? Oh yeah, he started Chewy. I didn't know who Ryan Cohen was prior to like December 2020. So out of nowhere, he became this huge name. But prior to that, you have to remember, it's not that he was a nobody, but I think in selling during this massive rise after he'd gotten at such a great price, everybody would have been like, oh, okay. And then in hindsight, oh, he did this, he did that. But at that moment in time, I think a lot of people have just been like, okay. But to see him hold the whole way through and then acquire more shares in March 2022 and then again in June 2023, I agree. You can, like, you have to wonder, what does he see that we don't? But at the same time, I think he sees the vision very clearly of where it's going. And I can't keep this on anymore. It keeps falling off too much. But yeah, the Luigi vibes. Howdy Tetron, keep up the good work, brother. Can't stop, won't stop. Jay, thanks for stopping in. Much appreciated. Yeah, no, I'm just trying to take it to the next level. Because, if I really want to just do media and talk stocks and money and sports and whatever it may be, I got to go all in. Right now's the time. So appreciate you all. Police that mustache. Yeah, Project Burpees. Thanks for being here. Problem is, I was wearing it all day, and there's a couple more on there, but they don't really look like a Luigi stash. But Luigi dropping the DD. Windfall, thanks for being here. You know the vibes. JP, thanks for being here. Let's all go. Luigi Gang, you know the vibes. Best GME news source. I'm honored. Thank you, thank you. But another good GME source, if you guys don't know, which I'm sure you do, Morant's Rants, the one, the only. He's always spitting facts, so always be sure to watch his stuff too. I made money with BBY, and it's no one's fault if others are too stupid. Ryan Cohen did nothing wrong. Yeah, I think you're right, Freshmaker. The unfortunate reality is, it's just his name is constantly still associated to this day, and I think that frustrates him after all this time personally. But the mega triple quadra super squeeze merger is still coming, apparently, according to some people. So we'll see how that goes. But yeah, it's unfortunate people lost money, but that's also the harsh reality of the market. And the other harsh reality is that there's people who probably got burned by it, and AMC that just like, oh, stocks, all this is a bunch of baloney. I don't want to be involved in that anymore. I'll just stick with my 401k. And then there's also a lot of people on the other hand, though, that took the positive and said, okay, well, I'm never going to fall for something like AMC or Bed Bath again of being like the next big thing. I'm going to look at fundamentals and really understand in what I'm investing. So I think you're right. There's good and bad that came out of it for individuals, in a sense that some took it as an opportunity as a learning experience. Others took it as an opportunity to be just, this is all rigged. Forget stock market investing type of vibes. So it's like anything else in life. I think how people handled it is really what it comes down to for themselves as an individual. But also keep in mind, it's like, yeah, the media is always going to paint a picture of some kind, especially in this day and age, and like with the algorithms and everything. It's crazy. I don't know, man. Tetro Invest kind of got a ring to it. 420 Bong Smoke, thanks for being here. Yeah, I mean, honestly, it kind of does. I do like that name as well. I got to be honest. King Tetro. Hey, appreciate that. I appreciate that. How do you feel about putting 10% of your portfolio into AMC? JP, get out. No, I'm just playing. I know why you're asking that question. You're playing games with me. But that's wild. That's absolutely wild. We'll put it to you that way. But so I'm going to get into the business priorities here. And damn, maybe I just have to rock this sign anyway. The Tetro Invest. Oh, but okay. Oh no, now I really did it. I just destroyed it more because everything just fell apart because it started like going all over. But see, this thing's pretty cool. It could be like boom, yellow, right? Maybe not. All right, I messed it up now, trying to do it too fast here. But I'm gonna fix that very soon. So, okay, I'm gonna fix that soon. But I appreciate the love for sure. So, business priorities. So this is something I was taking a look at. Actually, yesterday or kind of over the weekend. I'm trying to write a long thread going into earnings, of just kind of some things to look for, what I'm looking at. And, again, just to kind of keep building on information, but also made this mini thread today in looking at the business priorities, which I think gives you some good insight and kind of opens the door for some questions. So what I have up on the screen here is the Q1 2023 business priorities. And also, if you see here, phase one of the transformation, phase two, It's a little bit different than the one I'm about to compare to, which is Q2 2022. So Q2 2022 is the same report around this time last year, so about 1 year ago. And this report, is about 3 months ago, or as of the end of about 4.5, 5 months ago at this point. But regardless, I think the shift in tonality explains a little bit, but also, like I have some questions. So I'll definitely see what you guys think. And also maybe just kind of like scribble some of this stuff down on like a sticky note here. Or could just throw it down here at the bottom of this. Just so I have it as like scratch pad. Yeah, so any indication or direction of plan with Web3, that's kind of what I'm getting to. You guys will see in a moment. But let's get to it. So business priorities. And keep in mind, this is Q1 2023. So the most recent earnings report, if you go to the business priorities section, I believe it's like page 14 or 15, this is what it says. Initial phase of GameStop's transformation largely occurred over the course of 2021 and the first half of 2022. This period was primarily focused on the rebuilding of the company's decaying infrastructure and strengthening GameStop's value proposition, including investing in the company's enterprises, systems, technology capabilities, store leaders, and store associates, and product catalog and offerings. So that's phase one. I think that's kind of what was taking place throughout 2021. They raised capital through issuing shares, haven't issued any since, and that was at a time where the stock price was extremely elevated. They start bringing on a lot of new management, start a lot of out with the old, in with the new. A lot of the stock-based compensation things are set up through this whole period of what I would call phase one. So then I think they kind of entered into phase two in the second half of 2022, going into this year. And if you think about it from the perspective of full year 2021 and half 2022 being the phase one, and the phase two is the same amount of time, which there's literally no indication that it is. I'm just saying, generally speaking, that would mean phase two would be completed at the end of 2020, after second half of 2022, then end of 2023. And 2024 would be phase three, ideally, right, where you kind of return to growth and deliver shareholder initiatives such as potentially repurchasing shares, or maybe you're expanding the brand in some other shape or form. So, having said all that, let's read phase two. And again, that's just speculation there. We're going to actually see, and this is kind of what I'm looking for in the upcoming earnings report. Is there any indication of, let's say, indication of, I don't know why this is bold. Oh, God, I almost deleted everything. That would have been horrible. Indication of, what did I just say? Phase three. But it might not even describe it in that way, but just a new step in the business priorities / new step in business priorities. But also, if you think about it, if it is going to kind of be through the remainder of 2023, we might not hear about this for another earnings report or two. If there even is like a next step, so to speak. Priorities. I hate grammar and spelling, but another thing I'm trying to work on. My boss today, shout out to him, he's a great guy. I messaged something like, unless this, and he's like, just so you know, it's unless, and I'm like, appreciate it, because he knows I'm trying to get better at the grammar. Like, he's not like, oh, it's this, like, not like that. So we have a great working relationship. And I also, when I think about the relationship I have with my boss, I like to think that Ryan Cohen has this type of relationship with the executives, getting them to understand that they matter as an individual and their efforts, correlate to the success of the business, and then can correlate to, future pay raises for them and future benefit in the shares that they're compensated with. But, that's a whole tangent in itself. Indication of phase three, or a new step in the business priorities. So that's kind of something I'm looking for. I would say very roughly, but I want to read more here about what's going on with phase two, because I think phase two is. Oh, all right. My bad, guys. I don't know why my Wi-Fi has been so trash lately. We still good? Oh, okay. Yes, it looks like we're still chilling. All right, I thought it got disconnected. I was like, are you kidding me? I don't know what's going on these past few days. But moving on. So before I get into, what may come and what we might start to look for, I should probably finish reading through here before we start just throwing information on the page. But, these are all things I'm thinking Like I'm just speaking them as I'm researching also and typing out threads and stuff like that for X or Twitter. All these names are mixing me up between Twitter, X, threads. Regardless, I'm usually just speaking out loud. Like when I'm streaming, explaining the kind of stuff I'm eventually going to write, you're kind of getting an insight of how I'm thinking about it as I'm going. But also, in hearing me talk, you can see, oh, if this is how this person thinks, like this is probably why he's trying to write stuff down and organizing stuff, right? But moving on. They're trying to establish an omnichannel retail experience, achieving profitability, and leveraging brand equity to support growth. Those are their three overarching goals as of the last earnings report, right? It says enter into a new phase of its transformation during the second half of 2022. As a result, it's focused on those three overarching goals. So this also indicates that these are still the currently overarching goals. So omnichannel retail experience, it's really bringing everything what they're delivering, like the customer experience altogether, whether it's in store, online, just making it a seamless experience, easy to get customer service if you need it, easy to have a question answered, easy to make a return, all these different things that you would just think of when you think of a store you like to shop at that's not GameStop, maybe, which I think for most people watching this, it's probably GameStop. But the point is, it has it all, right? There's not like, but I wish they did that, or I wish they did this. I mean, I guess there's always that in some sense, but really just building the shopper experience and kind of creating a mold, so to speak, for what you should expect when shopping online or shopping in store. Like you should expect someone that's there, it's going to give you the best options, it's going to be knowledgeable about the company's offers, GameStop Pro, things like that. So achieving profitability, to me, that's like a direct indication of cost cutting and focusing on higher margin items and leveraging brand equity to support growth. So I think that's expanding upon the brand name, something such as GameStop Player. And that's something that's kind of up in the air right now because if on GameStop Player, last I checked, it still literally says like check out Telos, and they've said we're not working with Telos anymore. So I think they're still getting involved in Web3, but how are they getting involved? Do they still want to just kind of facilitate it? Is it really just them creating games, but then having the Web3 functionality with a Web2 type of interface? And when I say that, I mean kind of what Telos was saying when I was listening to some of their information prior to splitting off from GameStop, where they're basically describing it as if you're going to create a Web3 gaming platform, it has to be simple for people to use. The average gamer has to go on with the purpose of playing the game, and then they later find out, like, oh, I actually also own my assets. And it has to be extremely simple. So I wonder, is there not even going to be like a wallet? But then also, how do you make it simple to own the own assets? So there's a lot of questions to be answered at this point in time with Web3, but I still think the potential is there because I still think the idea of owning an asset in a game you play is something that the kind of gaming industry as a whole is shifting towards. It just makes sense to me and how the world is going and blockchain's developing and everything is becoming more analytical, more numbers based, more online based. So that kind of just all points towards Web3 getting involved with gaming. That's how I see it. But, in seeing them step back from Telos, step back from the wallet, and really just put a big emphasis on profitability, it makes me think it's something more so on the back burner or just one slight direction they're going, not like a hard pivot. Whereas that kind of was the perspective a little bit before, but not exactly because I think they were still improving a lot of their core business. But I was actually doing a quick Twitter live stream today. You guys can look out for those and follow me at Tetron Invest on X, Twitter, whatever you want to call it. But I've been doing some like lunchtime streams where I just spit my quick thoughts. And I was saying today how it seems like they really want to master the core business and make sure it's consistently profitable by cutting costs and focusing on higher margin items. And then you scale by constantly adding more product and officially managing your inventory. And then getting into these new arms of business. Maybe it's developing games, having in-store events. I think it'd be cool if GameStop Pro was integrated with GameStop Player. If, that's still going to be a gaming platform that it seems like is coming, then you should be able to get something online that incentivizes you to go in the store. And then when you're in a store, there should be a QR code you can scan that gives you a digital asset online for a particular game they want you to try because they've developed it. So I think they could really kind of put things together like that. But we're taking the following steps with significant emphasis on cost containment. So, and that's kind of what I put here: improving the core business for profitability and capability to scale while maintaining profitability, improving margins through operational discipline and increased emphasis on higher margin collectibles and pre-owned product categories. Ensuring the company's cost structure is sustainable to relative to revenue, taking steps to optimize our workforce to operate efficiently and nimbly. So I think that's some of the layoffs, for example. You're like, okay, well, we're going to keep the best employees who embrace the company culture the most and are pushing in the right direction the most. And yes, we're going to ask them to do more, but they're going to earn more in the long run. So I think that's kind of the structure from within, the culture shift from within, predominantly or prudently increasing the size of our addressable market by growing our product catalog across PC gaming, collectibles, consumer electronics, toys, and augmented reality, virtual reality, and other categories that represent natural extensions of our business. So, with that, I think they have to be careful with their inventory. You don't want a mass amount of inventory, especially in terms of digital products or consumer electronics. I feel like they're evolving very, very quickly. So you don't want to get stuck with a back order, then you get it, and by the time you get it, you should throw it down on clearance. So that's something I think that GameStop's operating very well on from within, because you have a guy like Ryan Cohen and you have guys like Larry Chang alongside him that are really closely looking at that. And on top of it, they're making some cuts to the workforce. But it's not just as simple as like, oh yeah, like we're just smart, so we know what to do now. What I think a lot of people don't realize, what it talks about here over the course of 2021 and the first half of 2022 was completely evolving everything from within and rebuilding, decaying infrastructure and strengthening GameStop's value proposition. To me, decaying infrastructure means there wasn't good retail technology keeping track of, hey, what type of product is selling better in what region? Why does this particular item sell a ton on the East Coast? Why is this bigger on the West Coast? Why are we selling more of this online? And if we're selling more of it online, why do we keep endlessly shipping it to the store when it's just getting marked down for clearance in store? So, all these different things, I don't think were being analyzed by the prior management team. So, with that taking place now, I think that's part of the path back to profitability. And then I'm going to get through this. And before I compare the next one, I'm going to hit the chat. So, sustaining a superior customer experience, supported by a seamless in-store and e-commerce experience with speedy delivery to our customers. So yeah, overall, just a strong customer experience. I don't know if anybody saw Larry Chang's recent Twitter thread. It was about essentially sticky customers being better than more customers. I forgot exactly how he put it, but basically he's describing that it's really important to keep the same customers happy and constantly returning, because the brand and the business gets so much more value out of those people, and they see higher profits from those types of individuals rather than the person that's just coming once a year for their Christmas gift. Not to say that that person should be disregarded, but just really focusing on your core customer base and delivering them what they want and what's selling the most of. So like if Funko Pops are popular, right? I just started buying a couple because I like Star Wars and like I like collecting stuff, right? So I just have bought a few like here and there now. Not like a ridiculous amount. But if there's a new one that comes out that I like, I believe GameStop will have it, so I'm going to go shop for GameStop at it. That's just one small, very specific example, but I think that's kind of the thought process in him tweeting about that. You should try and look for the thread yourself. He kind of describes it a little better, but I found that interesting, and I also actually replied on the tweet where I had a little bit of insight from Marshalls. So I used to work at the TJX company Marshalls, like Marshalls, Home Goods, TJ Maxx, Home Sense, Sierra Trading Post, all those names are under one umbrella. That's TJX. Stock ticker is TJX as well, but it's the TJX companies, right? That's the parent company. And pretty much the same customers are shopping at all those different stores I mentioned, whether it's TJ Maxx or Marshalls. People say, oh, one's better than the other, but it's the same company, right? It's the same stuff. So they had a lot of sticky customers. There's people I saw in there several times a week, right? Because when I was grinding, I was in high school going into college. I was trying to become a manager there, or I became like assistant manager. And, I was doing well, but it just became so much stress. And, shout out to anybody that works retail. That shit's a grind. I did it for a lot of years at a young age. So it really kind of taught me a lot about, just dealing with people and hot and cold and customer service, and just also how to deal with things, right? And just really a lot of life perspective, because also I talk to a lot of people, And also, where I'm going with this is so many of the same people came in, and I was like, how can they keep coming in? It's like we don't get that much new stuff every day. Like we do put out new stuff every day, as like the ads say, which is true because every morning we come out and we put stuff out. But there's also trucks coming every day, and there's a whole process in the back. But the point being, these people just love the experience of going there. You know, for a lot of mothers, for example, they would tell me like it's therapeutic. They're like, oh, I got to pick my kids up after this because we'd always get a rush, like right before school got out and after school got out. So being a manager and seeing that, I was like, all right, let's set up the breaks to, let's try and send more people on their break during this like 30-minute period when the moms are typically picking up their kids from school. Not to say there wouldn't be other customers at that time, but it's adapting to your core customer base. So it's not exactly the same example, but I've seen it from within where you get people that really love the brand and really love the experience. And, in that example, the mothers, or fathers or whoever, they're trying to just be away from the kids, just simply look. Then you had like, I remember this one dude, he's like, dude, the best razors here. You guys have just the best deals, like on the razors. Like that was his thing. Like, so it's like other people like, oh, the shoes, like I'd rather just keep looking here for shoes than just go overpay for some shoes. It's like other people like the hunt of Marshalls. So that's kind of their pull, I would say, or that's their like MO. But GameStop's is gaming and being the place for gamers, and that gamers love to shop. So I think if they really just execute on that, you have a lot of the same people like myself shopping there consistently. Are now anything I want to buy, I always check GameStop first. Obviously, it's because I love GameStop and I live a whole YouTube channel around GameStop, and GameStop's a saga, so prior to that, I wasn't necessarily thinking with that thought process. But that's also taught me, like, okay, if I'm going to invest in other names, for example, I own a couple shares of Pepsi in like an IRA from a while back. I'm like, damn, I should be, and I'm like always like, yeah, whatever about Pepsi or Coke originally, but I'm like, no, like if I own Pepsi, I should shop Pepsi. Like I really think the ideology shift, I don't know, was kind of taught to me with GameStop, and just also a lot of things happening in the world. I think you should put your money where your mouth is type of deal. I mean, I don't know, a lot of things in what I'm saying, but let me hit the chat here. I'm going off complete tangent, but let's see. At least the last two times Ryan Cohen bought in the low 20s. This should say something to everyone, I think. I mean, he clearly sees the value at 20 plus. Ryan Song, buy more. Hodl, dear ass Hodl. Like the stream, guys. Yes, thumbs up if you guys like the stream. Appreciate that, Fresh Maker. But yeah, honestly, when you think like, oh, well, why wouldn't Ryan Cohen buy more? I feel like if after earnings were still around this price, it's very, very, very likely himself or another board member or multiple acquire shares at this price point because it's incredibly low. I wonder if there's any rules going into earnings or like surrounding it. But at the same time, if every time the price just went this low, because it's kind of a game like longs versus shorts in a way, where if it was just known that they were guaranteed going to buy at this price, then it's kind of like if you're on the other side of the trade, then you're like, oh, well, whatever. We know they'll. I mean, I don't know. I guess that's not a good way to describe it. The truth is, I feel like it has to be a get. I guess what I was trying to say is like it has to be a guessing game between both sides. It's like, are those really going to buy more shares? And I mean the shorts. I don't know. I don't know if that's the best way to describe that, but just some perspective there. Still waiting for Icon to start being relevant in the saga. Same Ryan Song. I literally forgot about that guy. I watched like a documentary on him, and then it's like, oh, interesting. And then, I'm also not scared to admit. I want to be clear that originally when BBY was talked about and Ryan Cohen was involved, I was trading it a little bit, like very briefly. And I really haven't even traded much since then. Like I do the occasional like something, and I'm almost thinking now, is it time to sell a put on GameStop? Because you can earn a lot on your underlying cash in selling a put because of the high interest rate market. Like on Fidelity, you can still earn money on a money market account with the underlying cash, and then you get to keep the premium if the stock ever goes below that. But let me be very clear, I don't give financial advice. Always do your own research. If you're interested in selling a put, make sure you know what that means, how that's done before you execute anything like that. So I just want to be very clear about that. But yeah, where's Icon going to be relevant? And getting back to my point, I used to think, maybe it's possible with not Bed Bath, with Bye Bye Baby, because he wrote a letter to the board with it. And then initially, when it was like, oh yeah, he's about to get out of it, and the article's written the same kind of way. But then once Ryan Cohen was out, I was like, all right, yeah, I was wrong. And I can't believe to this day you still have like PP seeds saying like, "Oh yeah, there's going to be a merger." And again, if somehow, some way, there's some little thing, I'll say, "Okay, you got it, you were right." But there's not going to be like Bed Bath and Buy My Baby are already sold. Like it's just remarkable how long it's been dragged out to me. And this is the account I can't stand, Moon Club LFG. I hate to do this, but G America, GME times BBYQ times IEP times Teddy. Parody account. This is a parody account. So the Moaz started with BBYQ. So when this is a parody account, is that just saying it so to me, like, so you can't get in any trouble in any way or be held accountable because you just say, oh yeah, it's a parody. So he always just does this. He highlights random stuff, or she, or whoever's behind this individual, highlights random stuff and just says, "Oh, check in trial accusing a pump and dump shows discovery. Ryan Cohen bought in January 2023. Supersonic shield mods are writing FUD to counter the emission." And then he always like just highlights random stuff. Says, "Check, check, check. Oh, it's happening. Breaking news. BBYQ." And to me, I've thought about this for a long time, right? And this frustrates me because it's like, how could you be saying this still? And everyone's entitled to their own opinion, but what frustrates me is, or I guess it makes me think, if you're putting stuff out there like this, right? It's in the Twitter algo and it associates constantly like these bogus names with GameStop. So I think it discourages anybody from really looking into the actual financials of GameStop because you just assume they're all the same. And I think it's just very interesting, how GameStop's name is always associated with like names like this now, and how it's always a Ryan Cohen image up for like the profile picture. And then also this is a parody. It's like, I don't know, is that a parody? Like you're just trolling because it's so ridiculous, the idea of BBBY acquiring GameStop. Like, I don't know. If all of this, like, does anyone else think about this stuff? Or like, I'm always trying to think, like, what is the big picture of why what I'm seeing in my Twitter algorithm I'm seeing. I don't know. I think I'm going off on a complete tangent tonight on a lot of different things, but every time I see this in my feed, I'm like, this is just so ridiculous. How could this be real? But the way they always like call out like Platinum Sparkles and Badass Trader, like I don't know, like it's crazy. And it's unfortunate because there are, I think, people who actually think like there is something with Bed Bath and they're just following an account like this. Like, I don't know. I don't know. Everyone just do your own research. Like, that is always the number one thing. And I think the number one thing to be understood when you see everything that's happened. I don't know. It's crazy. But let's see. Still waiting for icons to start being relevant in the saga. Great take on operational failures in the past. Thank you, JP. Much appreciated. Jackson's evening, everyone. Supporting the company. $600 spent over the weekend at GameStop. Hey, Jackson's, that's awesome. And thanks for stopping in. Much appreciated. Cheers. I wonder if BBBY played out like Ryan Cohen wanted. We would have already had the MOAS. Yeah, exactly. I mean, if maybe, right? Because I see what you're saying. If it played out where he just wanted to acquire Buy Buy Baby and integrate it, like maybe there's some completely other plan that just never even came out. Because I think he was interested in Buy Buy Baby, and something didn't come of it. And Xbid had said on the past, shout out to him. You guys have probably seen him in the chat before, but he was saying, well, yeah, maybe Teddy is kind of him getting back at them in a way. Not getting back at him, but in the sense, hey, yeah, like, all right, I don't need Bye Bye Baby, because in watching Rance's content, he presents a lot of evidence, and of course, always do your own research, but he presents a lot of evidence showing private equity ties with Bed Bath & Beyond. So always do your own research, like I said. So it's always what you think. Yes, exactly. Thank you for pointing that out. Laughing my ass off, Platinum. Thanks for stopping in. Much appreciated. Yep, I watch the stream when I can. Much appreciated. Much appreciated. I really understand, guys. Everybody's busy. Like, everyone's doing their own thing. So, like, anytime you guys can be here or watch it anyway, like, I really do always appreciate it. So, but yeah, that's funny you're here right now as I was saying that, because it's always like an account like that, right? Like, or I already closed it out because it's just crazy. Moon Club LFG. And also, like I said before, like, you just have the average person that starts looking into some information, right, about GameStop. And then that's like the next thing that comes up, and you're like, is this something I really want to put my money into when I see stuff like this? But it's a crazy part of the world now, right? With bots and just AI and whatever else is to come, right? There's so much more to come. That's the scariest part. I really lose sleep over that sometimes, I swear, about how digital the world's going to be when I'm like 50. I don't know, like I'm only 23 right now. What does the world look like double the amount of time? Google really only became a thing shortly after I was born. And I think about how far technology's come from that. The idea of having a phone in your pocket everywhere you went was still crazy to my parents when I was born. So like when that happens, I'm like, what is it gonna look like in 2050 or 2046, whatever. But I'll just control what I can because that's all I can do, right? But in connection with our this is the last part here I completely missed before. Our cost reduction efforts. We expect to see favorable impacts in our selling, general, administrative expenses in the quarters to come as we pursue profitability. So they're straight up saying SG&A should be lower. We also maintain and continue to strengthen our strong balance sheet. As part of our efforts to achieve sustained profitability, we continue to evaluate our portfolio of assets to validate their strategic and financial fit and to eliminate redundancies. During the first quarter of fiscal 2023, we began the process of exiting our operations in Ireland. While we expect our intense focus on expense reductions to yield decreases in SG&A expenses, we have incurred and may continue to incur severance expenses, store closure costs, and other related expenses in the short term, basically expenses relating to winding down. We continue to explore strategic options, which may include further store closings and exiting unprofitable businesses. So, to me, what this whole thing says is all in all, turning a profit's number one. And I think that's really important. Numbers speak for themselves. And also, maybe that's why they're not even doing an earnings call. They're like, you know what? We're just gonna let the numbers speak for themselves from here on out. So, oh damn, I lost the chat on the side. Side device just died. But pull it up on the screen here. Yeah, so it's like that totally made me lose my train of thought. Side screen just went off. But yeah, I'm really excited to see them execute on this because this is sounds great and all, and that's definitely what somebody countering could say, like, oh, they're just saying all that. So let's see what's in the quarters to come, because also keep in mind, I think SG&A will be lower year over year, and I think in this quarter to come it'll actually be even lower than Q1 as well. But this same quarter in 2024, so Q2 2024, it could be even lower because there could be more wind down. There could be some one time expenses that are being accounted for right now that won't be accounted for then because it'll have already been wound down completely. So, really, the next, I mean, it's always exciting to see the earnings, right? But the next few, we can really start to see, like, okay, if this is kind of the final stage of the second half, like, what is just an average quarter going to look like? But also, just seeing continuous improvement towards net profitability, I think is important. And also just adding the right products and knowing their customers and just, like I was saying a little bit before, speaking to their loyal customers, to the sticky customers, that's really how they can just drive forwards. And then anything else they get into, like I think new merch could launch soon. That could be something that could be successful. I know I'd be down for some more GameStop merch, especially heading into the holidays. Maybe see an GameStop at ugly sweater, right? All these different things. But also from within, they have to see how they can make that all work out. But I'm sure they can find a way where they're going to turn a profit on that. So just leveraging the brand name, I think we could see more of that in growing as well. But the question is now, what's going on with Web3? I still think they're trying to get involved. I still think there's potential there, but I think they're only going to push it as far as we're not going to spend a massive amount of money on this in any which way. So we're going to try and execute, but if it's not possible within our structure, we're not going to overforce our hand, or we're not going to overstep. We're not going to get involved in some baloney lawsuit because the SEC wants to be annoying about crypto. So while we wanted to have a wallet, we can't because we don't want to deal with potential legal expenses. That's what I think it is. But, of course, that's easy to say now. I'll admit that the wallet's gone. But I think, that's part of business, having to adapt. And that's also part of good management, having to make the tough decisions. Tough times make for strong leaders. So it's a tough time for everything going on with, XRP results being literally repealed, even though it basically got ruled that it's not an asset, right? Yeah. So basically, it's the opposite of what the SEC is saying, though. So it's a whole, and now they're repealing it. And now Coinbase, they at some point SEC told Coinbase stop trading everything but Bitcoin. Like so much just craziness, and just imagine the legal expenses that could be involved. But again, that is easy to say in hindsight. I do admit. Let's see. Um, it's ringing bells. Hey, another thing. I say hi, ringing bells. Touch on is great info. Looking forward to earnings. Thank you, Platinum. Much appreciated for that comment. How much or how would you react if GameStop is unsuccessful at full year profitability in Ryan Song in 2023? Got ahead of myself there. Ryan Song, great question. Appreciate it very much. Honestly, I would really evaluate why they weren't profitable. Was it higher cost of goods? Is revenue not getting there? Is SG&A actually not decreasing besides them describing it would be? Is there future indication and another earnings report down the line that, yeah, SG&A didn't come down as fast as we want, but next year it's actually lower because the wind down costs cost more or a certain thing happened. So I wouldn't overreact because I would want to see why it is. But I would definitely say at that point, I would be like, okay, like there better be a good reason for this. Otherwise, like at some point, something has to change. Something has to really move the needle. But also, even if, it's not necessarily profitable, but it just misses by 1 cent, for the full year. That's also a little bit of a different story. So it really depends, but I would try and be more critical of it. And I'm trying to challenge myself of that because, it's easy to be like, yeah, I like the stock regardless. And again, it doesn't mean like I'm just going to suddenly lose faith and become bearish, but I think, you can be critical and then at that point, maybe then there's another opportunity or there's another road they're going down. Well, there's some acquisition they've made. So, it's constantly evolving. That's really, I think, the important thing also I've learned in following one stock like GameStop so closely, that any company you're involved with, they're always going to evolve. You always have to just continue to be educated on it. And also, I try and read other earnings reports because you also want some insight to compare to how like other companies talk about numbers. So what's up? He doesn't know you're the mod of Superstock. Oh, I do. Another thing I do. Don't worry. Platinum's awesome, but hi Platinum, says Jay. I tried to get him to talk about the incident congressional discovery. He doesn't know it'll lead to another congressional hearing that a 50 billion number gets to the press. Yeah, another thing. I do remember you were bringing that up. Yeah, I have to do a little bit more follow up research though before I talk about it again, because on the spot, it's definitely something to talk about, but it's hard to, on the spot though at the same time analyze stuff. So I feel like I got to do a little more DD maybe after the earnings and come back with some more info on the stream because it is one of those things, I do see keep popping up again and again since you did bring it up. So I do appreciate it. Let's see. Hey, buddy, keep it up. We're getting close. Jay, thanks for popping in. Much appreciated. Yeah, I think, every day is just another day in the saga, another day closer, right, so to speak. So GameStop is on a strategic path to fully leverage our unique position and brand in gaming. So this is Q2 2022, right? So check this out here. There's some of my comments on the side, but actually might be cut off. Yeah, actually put it up here. But regardless, it's a little bit of different commentary than what we're seeing now. So GameStop is focused on transforming into a customer-obsessed, technology-led company to delight customers. It's actively focused on efforts to establish omnichannel retail experience, expand our selection to deliver a market-leading offering in gaming entertainment, leverage existing strengths and assets, and invest in new growth opportunities. So, sounds a little bit different than the most recent report. So it makes me think again that they're just really doubling down on profitability and just letting the numbers speak for themselves. Being in a spot where like, okay, it could be a little bit of an up quarter, it could be a little bit of a down, but we are going to turn a profit. We are going to be in a spot where every earnings report, it's going to be positive EPS. I think that's the number one goal. And then you expand upon that. And then you also start initiating shareholder incentives such as repurchasing shares. I personally think repurchasing shares will be one of the first things they do, potentially before even an acquisition. Maybe a partnership before we see like an acquisition of some kind. But also if there's an acquisition, I personally think it would be small, like 250 million or less. It would be a small portion of their cash, potentially, even just 100 million, something like that. So it would have to integrate into their business in a way that would have high margins because I think that's what they're trying to focus on. But, it's interesting that they don't mention it in the same way. I guess it'd be good to look back over multiple years, over the past several years, even before Ryan Cohen, in what some of the language was and how they described the business priorities. Again, just for some perspective. But we're taking steps that include increasing the size of our addressable market. So that's kind of similar to the other one we were just looking at. Building a superior customer experience supported by a seamless in-store and e-commerce experience with speed delivered to our customers. Again, still consistent to what the last one said. Strengthening technology capabilities by investing in new systems, modernize e-commerce assets, and experience talent base, and launching new technology products. So that one's kind of off the list. So I think that's where we're seeing them now say they're nimbling down, so to speak, just narrowing down their workforce and just trying to keep the talent, I would say, and just really keeping the employees that are really, again, just kind of driving a culture shift. So improving margins through operational discipline and accelerated growth in higher margin collectibles and pre-owned product categories while building critical mass in new business initiatives and ensuring cost structure is sustainable relative to our revenue performance by aligning expenses to the size and growth of our business, including taking steps to optimize our workforce to operate nimbly and support our transformation needs. So again, I think improving margins and lowering SG&A costs has been consistently important for the company, but I think now in making it more of the main theme of the commentary on the business priorities, to me, it tells me that's just absolutely what their number one focus is. By executing these priorities, create a compelling experience for customers and be positioned to invest pragmatically and opportunistically in growth initiatives while focusing on maintaining a strong balance sheet. In connection with our cost reduction efforts, we expect to see favorable impacts on selling general administrative expenses. We believe these efforts are critical to achieve sustained profitability to enable long-term value creation for our stockholders. So there we go, of value creation. So to me, that indicates potential dividends like way down the line, share repurchases, potential partnerships, acquisitions, expanding the brand into Web3 or something else. So I think another thing I have to do is look at the other business priorities in the future on other reports and see how it's shifted over time. So it's pretty consistent, but I think the more recent one is just a little bit more direct. But also, I think you could take this with a grain of salt because, again, every company does this. And I'm sure there's plenty of companies out there that are just spicing it up like, ooh, we're doing this, we're doing that, we're doing that. So, of course, it's the company's commentary, and I think it has weight. But also, it's not weighing it down on the scale, so to speak. So, hit the chat real quick. I like your Marshall stories, man. They're good, man. I'm listening to you in my car. Appreciate that. Another thing. Yeah, no, I gotta tell you, I can tell another one in a moment. Let me hit the chat. Gotta go chill with my girl. Thanks for the great stream as always. Have a good time, Ryan. Hope you have a good night. And thanks for popping in as always. Splendiden. Got GME in my veins. Thanks for coming in. And sounds like you got power in your veins. You got the blood flowing. Hi Jay, hi chat. Internet stuff's crazy. Tetron, definitely check it out. They got Charges Wave, way more than Robinhood, but weren't even questioned. Ring Bills has done the DD there. Do you think they'll invest in more treasuries or perhaps an acquisition? It's been a while since they've done an acquisition. Honestly, Platinum, I don't think they've done. I don't think they're going to do an acquisition in the near future. I feel like if maybe stock prices fall more, valuations just kind of fall across the board, maybe there's an opportunity to make an acquisition. But I think if they do, it's going to be a small portion of their cash, like definitely 20% or less, probably even less. Just knowing like the frugal mentality of Ryan Cohen and the other people on the board, former Chewy employees. So, with all that being said, I feel like it's probably not as likely as a partnership. And if they do, it's going to have to, fit within their business. It's going to have to be operationally high margin items of some kind that they're selling, I would think, or some service or something to just expand their digital footprint because that is something they're involved with. But I think whatever it is, they would have to rebrand to GameStop. But in terms of marketable securities, I'm glad you said that actually because it does remind me. I do think they're actually going to put more into marketable securities because marketable securities, interest rates just continue to rise and interest rates have already risen from Q1 to Q2, and going into Q3 again, they're higher than the actual reporting date. So, with all that being said, I think there's more money to be made there, and since it's under current assets, it's still going to be less than 1 year. So you're still kind of taking advantage of the inverted yield curve. But also, I was reading into, like cash equivalents. So cash equivalents can be marketable securities that are, T-bills that are like 1 month or 3 months. So less than 3 months is defined as like a cash equivalent. So it also could be in money market accounts. So it's possible. So I'm going to definitely be keeping an eye on, their interest earned. So I think though, maybe more of it in marketable securities, because also if they purchase more marketable securities than those that mature, it'll negatively affect the free cash flow on the bottom line, but of like just total free cash flow. But if you just look at operational free cash flow, that would tell the actual story. And then I guarantee if that happened, the media outlets are going to be like, oh, yeah, negative free cash flow for GameStop, but not talking about the fact that maybe the operational one was like just nearly positive, right? Just saying for an example. But yeah, it's going to be interesting to see. I'm definitely excited. Those are definitely some of the things I'll be looking at. But earnings are always excited. But when something's as closely followed as GameStop, and they're so quiet with how they do things, it's so like, oh, I can't wait to know what the numbers are. Like, I need to know what's going on. Like, I want to know what's going on. Just give me the numbers type of thing. Like, that's why it's exciting coming up. And of course, if you love the stock, and love the company and just the saga, it's that icing on the cake, right? So, and by the way, Twitter is this thing though, or X? I don't know. I feel weird calling it X. Do you guys still call it Twitter? Because how do you call it X? Like, oh yeah, I was just scrolling on X. Like that just feels weird. Like Twitter X. Maybe I should just start calling it that. I don't know, but it's cool. You can do that button I just clicked, like the read button, and then it puts it into this whole thing. So, will there be an earnings call after GameStop reports earnings? 29 people voted, and 86.2% said probably not. And in looking to the difference in language, I think probably not. Now, also thinking back on it and digesting a little bit, but then also, part of me thinks, how epic would it be if Ryan Cohen just hopped on the earnings call and was like, "Yeah, we're profitable." I mean, obviously, if the numbers showed a profit, but not necessarily going to happen this quarter. I'll be honest, I'm not positive on that. Like, I wouldn't say like, yeah, betting all my money on over zero EPS, like 1, 2, 3, 4, 5 cents. I think it'd be amazing to see. But honestly, I feel like we're still going to be slightly negative, but I think we're going to see a significant improvement over Q2 of 2022. And then I think we're going to continue to see the improvement into Q3, and then I think Q4 will be very nicely profitable. That's my theory. But I don't know. I still don't want to put like an official Tetron estimate yet, so we'll have to see on that. Let's see. Um, Nice to finally catch a live stream. Pam, thanks for popping in. Much appreciated. RH Apex margin deficiency clearance issues being waived was just their cover, only scratching the surface. It's much deeper with all. Yeah, Instinet was bigger. Yeah, Jay, no, it's crazy. It really is crazy because it's funny how something's as big as Robinhood, and there's so much like hate directed Robinhood as a result of it, and people are obviously rightfully angry at Robinhood. But then you guys bring up a great point about Instinet, because Instinet is not talked about ever. I've never heard someone say, yeah, screw what Instinet did. Like, I mean, yeah, a few people here and there, like in what we're talking about, like in this particular category, but you can see a lot of negative attention from Robinhood. Like, it became like common practice, sort of, after everything that happened in January 2021. But there are still a lot of people that use it because, like, oh, it's just the simplest app. I just mean for like, maybe some friends I have that are like not that involved in stocks and stuff, or they're just kind of like, yeah, whatever, I don't care. Like, I'm just doing it to do a couple trades. And I'm like, yeah, no, screw Robinhood. But also a little more personal to me, I guess. But regardless, it's crazy. You don't ever hear anybody say like, oh yeah, Instinet, like Instinet is the ones who did it. Or, oh yeah, screw those guys. Nobody ever talks about that. But I'm trying to think of a quick Marshall story. I just realized I never got you there. Another thing, my bad. 99 problems, but a stock 8-1. What up? XBit, thanks for being here. Thanks for joining. I'm trying to think of a good Marshall story. Um, it's hard to think on the spot. There's so many good times because there's just a lot of unique people there, and then I had like a core group, and we'd always just have like, oh, yo, what's this person gonna say today or do today? And my boss was just goofy at times. Like, he's just like watching soccer in the office. Like, oh, it's so funny. Like, some of the people, the craziest one time, this guy like followed me across the whole store as I was just going to the bathroom, and like he didn't know it was the bathroom. I think he was just old and out of it, but he came in and he was like, "Do you guys do fitting here or something like that?" And I was like, "The dressing room's that way." And I was like, as I was going to the, I was like, so weird. He like followed me the whole way, but like not on purpose. And then Christmas Eve story. Okay, we're about to close. Of course, I'm closing manager, right? Because I'm a newbie as the like manager. So there's four managers. There's a GM, looks over the whole store. Then there's operations, which is like the back end and the front end, meaning the registers is the front end. The back end is like the receiving of packages and unboxing the merchandise. And then I was responsible for half the departments. Like it wasn't a huge store. I was like shoes, men's, and kids. Then the other manager was like the ladies department, um, the home department, and the beauty department. So split off half and half. So I have my portion, but of course, there's always one closing manager, and I'm the closing manager on Christmas Eve. But we close 6 p.m. So I'm like, all right, like I'm getting us out of here fast, guys. Like I got you. Like I don't want to be here either. Like that's when it's just you and the employees and you're the manager, you could be a lot more real than like obviously if I have my boss ahead like around me, I'd be like, yes, yes, we are completing our goals for today. I mean, obviously I was still myself. I wasn't like a total like what do they call it? Like yes sir, like but like drill sergeant, but it was a lot more real with them. So I'm like, all right, I'm getting us out of here quick. This lady walks in like 5:55, and like I do the announcement. I'm like this. So this is how I used to do the announcement. I was like, okay, everybody. Like I have your attention, please. This Marshalls will be closing in 5 minutes. Just again, this Marshalls will be closing in 5 minutes. Please begin making your way to the front, as the registers will be closing soon. After 9 p.m., our registers will not be checking out. Or I don't remember the exact things. I haven't said it in a while, but I would do a thing and say it very clearly. Like I like looked at her as she came in, and I was like, as I was saying that, and I was like, because when you say something so many times, it's autopilot. So it's like a script basically. So I'm saying it. I'm like, yep, this Marshall will be closing in 5 minutes. And I'm like looking at her, I'm like, just looking at her with the eyes of like, oh, the look of like, are you dead ass? And like, she's like, knew it. Like, she's like, I'm like, are you dead ass? Are you really gonna shop right now with 5 minutes left on Christmas Eve? And she knew it. And then she's like over there, like looking all around. I see her scurrying around, and the employee's like, no, she's still shopping back there. Like, that's the thing too. The employees get stressed, like, oh, this customer will leave. We got to do something. And I'm like, all right, like we technically can't force them out, but like, yeah, it's Christmas Eve. I gotta get out of here. So I just went over by her and I was just like cleaning stuff up and I was just like waiting for it to hit 6. And then I was like, okay. I was like, I'm sorry, you have to start making your way to the front. And then she's like, are you following me? I'm like, nope, I'm just doing my duty of making sure the store closes on time. Or I don't know, I forgot exactly what I said. I was like, I'm sorry, but the store's about to close. She's like, you're following me. I'm like, I'm just doing my job, ma'am. And she's like, "Meh, meh." She goes to the front. And then even if she's going to the front, she's still like grabbing everything. And there's no line left. She's literally the last one there. And then I have to like manually open and close the doors because they're electronic. Like, usually it's like the automatic doors. But at a certain time, you're supposed to lock them. And then so nobody else just walks in because if someone else wanders in, it's a worse problem. Which, by the way, I've literally worked there so long. I had a nightmare where I was trying to close the store and people kept coming in. I couldn't stop them. Every time I let someone out, someone was sneaking in. It was literally a nightmare of mine. That's how long I worked at Marshalls and how much shit I dealt with. But with this lady, then she's like she literally like took long at the register on purpose. I swear, she didn't get out till like 6:15. I was just like staring at her. She was leaving, and I was just like, I don't know. I think she made a comment. She left too, and I just thought to myself, I'm like, bitch, you're literally the Grinch. Like these people like trying to go celebrate Christmas Eve with their family. Like my parents have everybody over. Like I'm the last one to get there. Like crazy, crazy. In retail, like very little care for people, unfortunately. So yeah, that's my Marshall story. That was the good one I could think of. I should have actually saved that one for Christmas, to be honest with you, but that's all good. I'll have to think of another one for Christmas time. I'm sure there's definitely more. If I hang out with my friends from when I worked at Marshalls, like some of the old guys I'm still in touch with, then I could definitely get some good stories because they always remember everything. But GameStop, right? Let's get back to it. So yeah, I think I'm just gonna go a little bit more. What time is it right now? 8:30. Yeah, so I'll just go a little bit more here. I'm just gonna go through this thread I put out the other day. Appreciate all the love on it for real. I'm gonna keep trying to make high quality threads like this because I feel like that's what it's about. Why just always post memes? I mean, memes are great. Don't get me wrong, but I'm trying to just step up my game. So I was talking about just the cash equivalents, marketable securities. I know I touched on it a little bit already, so I just want to quickly go through it, and then I will kind of wrap it up here. But they have 1.31 billion of cash equivalents, and marketable securities combined going into the next quarter. So that equates to $4.30 per share of just straight cash. And with only 26 million in debt at literally an interest rate of 1% or less, it's incredible cash relative to debt. And that just gives it a lot of value in itself. Just looking at the cash per share, literally the other day, if the share price was at like 17, or even if the share price is at now, it's still worth almost 25% in cash, which is just kind of crazy to think about, especially for the fact there's like very, very limited debt. So cash equivalents, defined as highly liquid investments with a maturity date within 3 months or less. Some examples: money market funds, T-bills, or certificate of deposit that's short term. And again, with inverted yield right now, you want shorter term treasuries, right? And personally, I believe interest rates are going to continue to rise. And also, at Jackson Hole, where Jerome Powell just spoke on Friday, he basically said, like, yeah, we said we were going to stop raising rates, but we're still at 3.2% year over year for the inflation reading. So the goal is 2%. We'll do whatever it takes for the Fed. That's our job. That's kind of what he said in very short. So, also, in looking at the fact that demand seems to be drying up a little bit for T-bills, that's why Fitch downgraded America from AAA credit rating to AA. And it's like, okay, like that, if there's not enough demand and you need to sell them, that also is kind of more incentive to raise rates, right? I would think that factors in. So it seems like another rate hike might be coming. And for a long time, the rate hike, and you can have your own opinion on that, of course. I mean, there's definitely room for disagreement with it, but I just feel like the fact that inflation is still a thing, and also if you look at the 70s inflation chart, it went like this and then it went up again. And the Fed raised rates all the way to like 14, 15%, I believe, at the time. So there's been major interest rate hikes in the past. So I feel like that just kind of shows anything could happen. And at the same time, if demand's slowing down and you have a situation where, I mean, obviously inflation's the number one, and how he was describing it. See, I was like writing some information. I don't know if I'm gonna make this a thread, but Jerome Powell basically described it as sees ongoing inflation as a result of the collision from very strong demand and pandemic constrained supply, and its unwinding of pandemic demand. So, in thinking about that, invert when you have that's probably going to maintain an inverted yield curve. And what I was trying to get to, which I kind of forgot for a moment there, to be honest with you guys, the S&P 500 and just markets as a whole have priced in the idea of rate hikes for a long time and this rate hike cycle happening. So further rate hikes, I think, could do a lot more damage because it's now not priced in, and the market just trades so much on confidence in the short term. That's what I've kind of really come to realize over time. And if you have future rate hikes that are going to be coming and confidence is lower, whereas in the past, like, yeah, you knew they were, like, if you know it's coming, then you can confidently make your play, so to speak. So I feel like markets can react a lot harsher to the next couple rate hikes if they do occur. But having said all that, being in the position you're in with GameStop, that's the best case scenario. If that happens, I'm not saying they want that to happen. That's good for businesses and the economy as a whole. But I'm saying if that's going to happen anyway, if they're still operating in a situation where their overhead costs are very low, so they can turn a profit no matter what, and they have cash, they're going to be able to keep churning out interest. And personally, I think inevitably buy back shares. So that's why I think interest rates are so relevant and why I kind of wanted to write this whole thing out. And we see last quarter they earned $9.7 million in total interest. So is interest expense net, but in parentheses, if it's negative, that means it's income. Because you have to think about it. If it's, the cash flow, it shows the operating loss minus negative, which, if you subtract a negative, that just means you're adding it, minus negative 9.7 million, just means you're adding 9.7 million to the cash flow. So I'm sorry, I was saying before that I think I said before that the interest was on the cash flow statement, but I was wrong. It's on the statement of operations for where they're earning it on those cash equivalents and marketable securities, though. Those are under the cash flow statement because if it's a short-term marketable security, in GameStop's case, it's short-term T-bills. Those are only paying at maturity, meaning they're not paying monthly interest. They're paying out in full at maturity, more than the price that they were paid for, which factors in the interest. So marketable securities, the specifics of how I figured out that they're T-bills, or it's U.S. government Treasury notes and bills, so T-notes and T-bills. But I believe T-bills is only when it's shorter term and notes is long term. But you can see on page 12 of the report that the marketable securities are the government Treasury notes and bills. So that's where they specifically indicate it. With the inverted yield curve, and kind of what I was just saying there about the share buybacks. And these are the other potential things that could happen. And again, I touched on some of these things before and what it takes. New segment of business, I think it absolutely has to make sense. I think there's still potential there with player. I don't think they're just throwing that away yet. So we're going to see what happens. Acquisitions. With acquisitions, again, I was kind of saying before, I think only if it really, really makes sense, where it can be perfectly integrated profitably, and potentially, if we do see a market kind of crash scenario where valuations fall down, then maybe they can acquire something at a discount. Dividends, I think that's way down the line. That's something I don't think about for quite a while until they're absolutely rocking and rolling. And growth initiatives, I think they're just always going to be open to any way they can expand their product catalog and just really execute on their core business, because that is really what GameStop is, right? A place to shop for gamers, whether it's in store or online. That's what it is at its core. And then I think they can expand upon that. And that's through the strength of their brand name, in my opinion. But all in all, generating positive free cash flow will grow the company's cash pile, which will inevitably lead to future shareholder value. However, these are just some of my thoughts and opinions. Always do your own research. Yep. So that's the end of the thread. Definitely drop a like if you guys have a chance. But yeah, now I'm totally getting burnt out. So I think I will pretty much wrap it up here. Let me just hit the chat. I used semi-summoning closing time when I needed people to get out of the gym. I like that. Another thing. That's funny. Let's see, probably around the same time AMC shareholders sue Adam Aaron because, meme stocks, they are the same. Asid, thank you for being here. Much appreciated. Yeah, it's the same thing. I saw a thing, I don't know if it was just some like shit post or something, but excuse my French, but where it was like, oh, Adam Aaron's phone number was out there. Is that true? Somebody please let me know if that's true. That's crazy. I mean, I just think he's a bomb. I think he's a bomb. I just think he's a lot of talk. So it is what it is, though, right? It is what it is. So the saga continues, and looking at the price action comparison from GameStop to AMC today, is this the beginning of the decoupling? It kind of seems like it, but it's only a couple days in, and somebody did ask that today or say that on one of my tweets, and I replied, and I was like, it very well could be, but also, starting from yesterday, or sorry, Friday, but it also very well could be, just a blip on the radar, right? If there's anything the saga's taught me, it's always zoom out and just focus on the core aspects of the investment and the big picture, because there's always going to be noise and short-term thoughts and this and that thrown your way. But if you're focused always on the big picture, like obviously don't just like blindly ignore everything, or do whatever you want. I'm not saying blindly ignore everything. I'm just saying whatever you're relating your information to, or like reading it, like make sure if it's going to impact you in some way, it sticks to like your core. Or I don't know. Figure that out for yourself. I think I'm putting myself in a word pretzel here, but it's all good. So GameStop up 2.57% today. AMC down another 11%. And it's just unfortunate because every AMC share is now literally $1.10 if you do pre-reverse stock split. So it's definitely at a 52-week low. It's just absolutely fell through the floor with the conversion. because people weren't really buying the stock at the other price. I personally believe before the conversion. So if you don't have buyers at that price during the conversions, which is a dilution process, how are you going to find buyers there? So tough situation for AMC. I mean, I'm not saying, movies are bad, but management's bad. That's the unfortunate thing. And that's what I realized with all this stuff, real world companies such as like AMC or Bed Bath and Beyond, where you think about the actual store and then you just talk to, like, for me, for my family, for example, like my aunts, my parents, grandparents, about like just stores closing, or like Bed Bath and Beyond, or like, oh, retail stores closing. It's interesting hearing like their perspective, and then seeing the perspective from within the numbers and the stock community amongst individuals just discussing things. It's so funny like hearing the differences of things, like just what is discussed, or just perspective. That's what I'm saying. Not trying to like say anything bad, but just the perspective of different sides. How just, oh yeah, well, just obviously I was going there and they are just having less stuff and they're just overpriced, so I kind of went there less. Just more of that perspective where people, oh, the numbers of this, or it means the mega squeeze of this. And also, it makes me think like, damn, when some unfortunate things do potentially happen within these companies and they do go bankrupt, a lot of people don't even know the truth of some craziness going on, potentially, allegedly, within some of these companies. And then that leads to names like AMC potentially going bankrupt, right? Whereas I think AMC's loved by moviegoers. It's, the biggest movie theater chain. So just your average person who doesn't care about stocks and just likes going to the movies, they probably love AMC. When it goes, if it potentially goes out of business, they're gonna be like, damn, this freaking blows. And not saying that there's a, like, AMC's, I know exactly what AMC's management should have did to turn it around, but it's just kind of crazy that there's potentially, some people use Toys R Us as an example that was kind of destroyed from within. I don't know how much truth there is to that. I mean, I don't have enough knowledge to speak to that. I should put it that way. But, there's some allegations that some shady stuff happened from within. And companies like Toys R Us, that's why it happened. That's why it was maybe allegedly going to happen with GameStop. So it's kind of crazy that that happens with some of these names. And what, goes on behind the scenes, and a great series to watch. You guys should all check it out. Connecting the Dots by Morant's Rants, where he talks about a lot of this stuff, how just follow the money. It's all about following the money. And some kid in my class said this once, and I forgot his name, but shout out to him. He's a really, really smart guy. A little socially awkward, like when someone's so smart that they're like, there's a little socially awkward, but really nice guy, really cool guy. Um, he said, money literally makes the world go around. And I thought to myself, I said, what does this kid mean? But when you see how like it makes everything happen, it literally makes the world go around. And I was like, huh. Like as time has gone on, I remember him saying that, and I'm like, I see why he said that in terms of just economics and just people at day to day. Everything is a purchase. Everything is created from somewhere. Somebody creates it. Somebody produces it. Somebody provides the service of delivering it. Right? Everything's an economy. So money, in a way, literally makes the world go round. I don't know. I just thought that was an interesting statement. I think I'll pretty much leave it there. But let's see. Yeah, I just joined. What are your estimates for GME free cash flow for Q2? Connor Nee, thanks for being here. So I didn't actually drop an official estimate yet for free cash flow estimates. I'd like to think positive, but I like just off the dome without like doing out any math or like putting anything together. I could see a number of like maybe 30, 40 million, slightly negative, but there's a lot of ways it could be positive, and that's just completely off the dome. And this is also after last quarter where my estimates were completely off, so now I feel like I have to be overly cautious, but, or I'm just naturally being overly cautious, but I don't know. Take that number with like the tiniest grain of salt, because I'm going to try and math it out more next stream on Wednesday, so stay tuned, guys. But yeah, so gonna make like official estimates soon, so to speak. But again, even when I come out with those, take it with a grain of salt. I just think of it as like analysts can throw out estimates. Why can't I? And I'm not saying like, oh, it's gonna be this, or I'm betting everything on this one number happening, but Just gonna say at best of my knowledge, best to what I know. But also, I encourage everyone else to do that. Why not make your own estimates? I think it's just good practice in following a company because the closer you are, or even if you're just in the range, I think it tells you like, okay, like I'm at least aware of what's happening with the company I have my money in, and that's to say for any stock. I don't know, but thank you guys so much for watching. Anybody who's watching this live or watching it back, much appreciated. I hope everyone out there has a good night. Let's leave it off on a nice name, GameStop. But yeah, have a good night, everyone. Take care.